So we're going to talk about some of our favorite stocks to buy right now as we head into the latter weeks of the year. Um, and I guess I will go first. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get a message from our sponsor, The Motley Fool. It's the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. All right, so I'm going to jump right into mine. And I might see a little bit of eye rolling from Tyler here, but hopefully not too much. I think a kind of timely opportunity as we head into December is General Motors or GM. And the reason I say that is, well, there's a lot. In other videos, I've talked about why I like GM for the long term. I think their capital allocation is great. I think their CEO is great. I like their cost reduction plans. I like how quickly they've pivoted from that EV only strategy and really kind of you know shaking things up when it comes to their battery plants and things like that. But I do think it's kind of a great near term opportunity because of these tariff fears that are going on right now. The stock dropped quite a bit recently because President-elect Trump says or threatened to impose a 25% tariff on goods made in Mexico and China. And not only is that a lot of GM's production, it's where their most profitable vehicles come from. Specifically, their full size pickup trucks. Those are all made in Mexico or Canada, um, and so that would impact them tremendously. It's unclear how seriously we should take the threat of that tariff at this point. If they made their cars in China, I would be a lot more worried. Uh, but I think that's kind of an overcorrection in the stock. I think it's down like over 10% in the past week or so since that threat was made. And remember how GM has a massive buyback program where they already bought back over $10 billion of their own stock in the past year and a half or so. They have another, I think, $6 billion authorized. Great opportunity for them to put that to work. They surprised everyone a few weeks ago when they said that they expect their earnings in 2025 to be, quote, similar to 2024, which a lot of people were expecting that to really take a dive because of the pivot away from the EV only strategy. But with really smart cost reductions, they're doing well. Um, I think the market's giving literally no value to the cruise division right now, even though that's quietly starting to ramp back up again. It was a very high profile kind of mess up a few years ago when I remember one of the cruise vehicles ran over somebody and they had to shut the whole thing down. The new leadership of Cruise is doing a great job of getting things back on track. It's taken a while, but that's kind of a wild card that the market is giving almost no value to right now. Um, but yeah, so I think GM's kind of a nice timely opportunity in December. Um, Tyler, I'm not going to ask your opinion on GM, but what are you watching as we head into December? I bet it's not
Well,
GM.
well, it's not. As I've said before, I kind of have my doubts of the automotive industry in general. So, but I'm going to go with one of those stoic industries that has been around a long time, as well as much as making vehicles, and that's producing oil. I'm going to go with TotalEnergies. It is very much it's kind of in the same vein as the Exxon and Mobil and Chevrons in the world, in that they're an integrated company. They have production of oil and gas, they have refining, they have retail, um, they have a significant LNG business, or liquefied natural gas, exporting it and trading it internationally, as well as a significant electricity and they call it integrated power system. So mostly renewable electricity with a little bit of natural gas fired merchant power as well. The reason that I like them specifically right now, and I'll get to the valuation in a minute, and that's kind of valuation is a big part of this, but I don't want to get too deep into the weeds because it is such a large, sprawling company. This is a $130 billion, integrated company. It's got lots of moving parts. But here's what I like about it kind of on the whole. Number one, it has a good pipeline of oil producing assets that are going to produce cash at low prices per barrel. And it can maintain low price per barrel production for several years, and but doesn't have a huge plan to grow it. So it's just like it's going to maintain this cash engine that's just going to throw off lots of cash. It can invest that in natural gas, LNG, which is it expects to grow significantly between now and 2030, with several LNG export projects coming online in the next couple of years. And then it expects between now and 2030 to add about 100 gigawatts of renewable power production in the next several years, between wind, onshore and offshore, as well as solar. And specifically with their renewable energy component, a lot of oil companies have tried this and they all kind of stink at it. But what I do appreciate about TotalEnergies is they've done it well. Their average return on capital employed for their entire renewable energy segment is over 12%, which is way, way better than almost any other oil company that has tried to do this. So they're doing it. They're doing it profitably. They're growing in the sectors of the market that demand growth, and its oil production is a good cash engine. All of these things result in a dividend that yields about 6%, growing 5% annually. They bought back about $10 billion worth of stock this year, with plans to buy back another $8 billion in 2025, unless there's some significant changes in the oil and gas market between now and then, is what they've said. So you kind of combine all of these things together, and you get, 6% forward dividend yield, buying back about 7% of its shares outstanding every year, paying down debt. You get a pretty high shareholder yield, especially relative to a lot of the other um, like integrated oil companies like ExxonMobil, Chevron, which have valued much, much higher, have lower dividend yields. Their buybacks aren't quite as impactful. All this, I think, kind of all shapes up for me is TotalEnergies is one of the more opportunistic investments in the oil patch, despite the fact that, a lot of people haven't been too thrilled with oil and gas this year. And so I think because of that, it seems to be one of the better times to get involved.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.